Bitcoin is trading back above the 20K level, up more than 30% from the cycle's low as an impressive start to 2023. Even as BTC is still down nearly 70% from its all-time high, there is a sense that this latest rally is more than just a bounce, considering the technical setup in the context of recent developments. Following a year defined by extreme volatility, including the high-profile crypto sector scandals, Bitcoin stands out as a survivor of the crypto winter, positioned to emerge stronger. The way we see it, the long-term bullish case for Bitcoin is as strong as ever, with the added benefits of new macro tailwinds. We're bullish on BTC and expect more upside going forward. Several factors help explain the newfound momentum in Bitcoin. First, we can bring up the improved market sentiment across most asset classes reflected in the strong rally in stocks over the last 2 weeks. From an environment of extreme pessimism at the end of December, the pendulum has sort of swung out with the market assessing the most recent economic data. Solid December payrolls report, along with an encouraging inflation update showing the CPI decline on a monthly basis, has helped ease concerns over the most pessimistic scenarios. The setup is particularly positive for some of the worst-performing market segments in 2022, including the speculative side of next-generation technology and crypto. For all the things Bitcoin is and can be, it still represents a segment of high beta tech through its connection to blockchain applications. A rebound from the side helps explain part of the current strength. Separately, those signs inflationary pressures are easing have opened the doors for interest rates to stabilize, working to drive a sharp reversal of the US dollar lower as a global theme. In this case, Bitcoin as a digital asset, an alternative to fiat, is rallying now by capturing similar high-level trends as foreign currency and commodities like gold. The point here is to say that the rally in Bitcoin isn't so much based on a single factor or headline, but through a combination of several macro themes and market fundamentals. Still, we think there's a bigger story at play than BTC simply riding the tide in risk assets higher. Crypto sector-specific developments are also adding to the momentum. If there was ever a time for the long-running call among crypto skeptics for Bitcoin to crash and burn to zero, 2022 would have been it, but here it is, standing firm. One of the biggest stories last year was the apparent overnight collapse of FTX, once among the largest crypto exchanges in the world. The case we made before was that the bankruptcy would ultimately prove to be positive for Bitcoin, as it could mark a capitulation of the 2022 crypto sell-off and a final reset compared to the exuberance that got ahead of itself at the highs. The prediction is starting to look good now. In our view, the FTX fallout may have helped Bitcoin consolidate its place as the gold standard of crypto, with the real losers being the category of smaller crypto alts and tokens which played a central role in the demise of 2022 crypto casualties, including FTX and other examples like the case with Celsius Network. We sense that efforts at new regulations being discussed by governments looking for tighter controls of the crypto market will be directed towards the side of centralized exchanges and private coin offerings, which are a source of system vulnerabilities. There was a time in 2021 when a crypto-related startup could get away with just a flashy name. The difference now is that investors will be much more skeptical to jump on those types of ideas. That leaves Bitcoin as the first and largest cryptocurrency, where its decentralized public protocol is bigger than any single celebrity character and has proven to be secure. By this measure, Bitcoin simply got caught up in the scandal headlines while not directly connected. To be clear, we still see a place for various other cryptocurrencies, including the established majors like Ethereum, but the big takeaway is that the case for BTC gets reinforced. A growing understanding of its importance as a store of value and alternative asset bodes well for its continued demand as a form of money and payments, beyond the scary value assigned by both small and large investors. The upside potential is the long-term bullish case for BTC has only grown over the past year. Fast forward, it's encouraged that more than 2 months since the FTX collapse, we haven't seen a wider financial contagion event taking place within crypto. In our opinion, the relative stability in the price of Bitcoin in the period since, reinforced by the current rally, suggests that the worst is over and that the market bottom is in. We can also bring up the report suggesting the FTX bankruptcy proceedings are moving forward, with more than $5 billion in assets recovered, as a positive step in restoring confidence. BTC price forecast. through a reset of expectations and the total BTC supply consolidated among a group of committed long-term hodlers, we believe this rally has room to run. A bullish call for BTC from here will need the macro picture and broader risk sentiment to remain positive, which reflects overall optimism going forward. Looking at the chart, it's encouraging to see BTC back above 20K and also climbing beyond the long-running downward trend line that has been in place through all of 2022. It's a breakout higher in our book, and we see the momentum building as more traders and investors come on board. At the same time, it's important to recognize that there are key areas of technical resistance approaching. Ideally, we want to see BTC trends over 25K, which would signal a more significant shift in positive momentum, returning the market to levels from the first half of last year. To the upside, 30K would be the next major target as our initial year-end 2023 forecast. The other side of the discussion considers the ongoing risks. Even with a bullish outlook, it's not going to be a straight line higher. It's important to remember that BTC and crypto remain speculative, which translates directly into recurring volatility. On the downside, holding 19K will be important for the bulls to maintain control, while a break lower would force a reassessment on our part. The possibility of a deterioration of the macro outlook, including the possibility of a sharp, strong dollar, would also be bearish trends towards BTC. We mentioned the ongoing discussions by governments globally to add regulations to the sector, or even an outright ban. These sorts of headlines have the potential to undermine the bullish case and should be monitored. What do you think about the future of Bitcoin? Tell us in the comments below.